Now we're gapping down 45, 50 cents or so. I still have, this was a nice well, that's 5-minute chart. Let me change this to 15. And Greg nailed that bottom for a scalp yesterday into the close on that potent 2-bar reversal right there. All right, 15-minute chart. So we still have a bottoming pattern here, right? So a 30-minute high corresponding with taking out the high of this 15-minute bar will be a better, Facebook after the close, correct. This will be a better short-term bottom. So for our spider puts, short puts that expire today, if this sets up 30-minute high the way I just described it, in my opinion, it's going to be a no-brainer. We'll short, 262, maybe 261.50. We'll see how it shapes up. Puts that expire today, and then Greg will look at the internals and we'll decide if it shapes up enough for us to sell a put spread for Friday. And yeah, we have a lot of earnings, so that's a higher risk, but we'll play it by ear. Diamonds, Boeing was up big. We're going to look at all those. So diamonds are holding up a little bit better. Boeing here. I actually got an email the other day from somebody saying, "Hey Dan, just FYI, the Nigerian brothers on CNBC, they come on at noon, over the doldrums, and they said, they're bearish on Boeing." And I think he sent me the email here over the weekend or whatever. And I said, well, it's not a bearish chart by any means. Who, the Nigerians? I mean, they're smart guys. I don't follow their trades. But I answered this person. I said, well, I don't know what's forming their belief, because I said the charts don't support that. So if they're using fundamentals, inside information, whatever the case, then fine. That's what makes a market. People have a reason to buy or short something, right? And ours is not fundamental. We just don't. Homie don't. Where did that come from? Homie don't play that game. What show did that come from? Now that I'm thinking about it, I think it was just a regular 30-minute sitcom. I forget, or a cartoon. I'm gonna have to Google it. Homie don't play that. We don't play fundamentals. That's not our bag. So anyway, Boeing here gapping up 50% into this ugly range. So absolutely nothing to do. But, Boeing had blowout earnings. Qs, 4 days down. This looks good. This looks actually better than the spiders. Can you tell me why? Because of this bottom. And it's higher. Look, this 15-minute chart, this consolidation is in the upper part of this wide range bar. Do you all see that minute difference? Look at that. So the Qs don't have expirations that expire today, so you would have to do Friday, but I'll keep an eye on both of these. Our open positions, we're still in XLE and HAL covered calls. Those are totally fine. This UNH, I see it gapping down $1 or so, but wrong symbol. We are short the 230s, so that expire Friday. So that's just a race against the clock, and it closed weak with the broader markets. We don't have that much inventory. Still watching some of these climactics. I put a chart up in BMY just in the private Facebook group, just to show you how we use multiple time frames. And this 2-bar reversal was when I mentioned to Greg yesterday, hey, check out this reversal. And he said, well, we're not in it, so why do I care? And I'm like, oh, no, because it's an educational lesson. But that was the key right there. That set up the higher low. All right, let's go to gapping stocks now. So we went over Boeing already. Anthem, gapping up 230.75. It's gapping the resistance, but 30-minute high candidate. 30-minute high candidate for a put spread. Anthem. SVU, gapping up here to 1505. Total garbage. It's gapping into garbage land. So I am deleting him. I have no interest. Texan. Had a big gap to 102.50, but look, it's also gapping. I'm just eyeball it. I don't need precision. And now it's back to 155. I mean, it could set up as a day trade, but I'd rather look. It's a downtrend. It took out its prior low. The weekly's breaking down. I'd rather just focus on the Qs and the spiders. Why be bothered with Texan? He's gone. RHI. I don't see any gap yet, so I'll just wait. Cree, gap up, pull back, 42.65. That's one 30-minute high candidate. Look, it's gapping over this, negating this red bar. So that one looks good. And it came in here pre-market. So if we can get an intraday setup within the first 30 minutes, I'm going to put this in a thumbnail on my other screen. Cree. Okay. CB. I don't see any gap yet, so I don't have an opinion, but the daily and weekly are a mess. COP, bank stock. I see one print down here, 94.55, but I don't trust it, so nothing yet. Amgen, no great prints, and it's just a total sideways consolidation, nothing. VIAB, that gap up here to 32 doesn't look real to me. So 31.30, it's gapping, to resistance. I'd rather play with the Qs. You're gone. Amgen, did we look at him already? Yeah, set a mess. And, bio. USG, I can't tell where it's gapping, but it's, this was a pro gap, but it's getting toppy here at resistance, nothing to do. TMO, I can't tell where it's gapping. Rock, military stock. Wow, this one is total relative weakness to some others. Look at that, it was 210 here on the weekly. Wow. Whatever Trump's doing with investing in the military, this one is not getting the love that the others are. Oh, remember LMT from yesterday that had earnings? And I mean, that just shocked me. A gap up and just selling all day long. Wow. OC had earnings. It's bearish all time frames. You got a bearish, consolidation here, breakdown, gapping down again. Now, is this an exhaustion gap, do you think? Down? Do you think that's a novice gap down? The answer is no, because it's not from a fluid climactic buy setup. So I have zero interest in this. Maybe short a bounce for a day trade. NSC is a railroad, not much volume. I can't tell where it's gapping, but I would have no interest until it took out yesterday's high. IR. Wow, that looks similar to the OC we just looked at. Look at the monthly here. This is a topping pattern with kind of a breakout bar failure here, right? This green bar was strong. It made new highs, bearish engulfing, back to support, and bearish consolidation here on the weekly, daily, declining 20, 50. This, continues to look lower on the weekly and monthly. So that is a bearish watch unless earnings can negate the breakdown. HES got extended with the sector. I can't tell where it's trading. I have no opinion. All right, a couple more here. Let's see, Twitter, that's where we started. Twitter had very nice earnings and with, was up here over 32.50. It's now giving it up. So 31 bucks is only a 50-cent gap, and it's a total mess right now. Siri, it's kind of flat, nothing there. I have no interest in that. Teradyne, yeah, it was showing it was down huge this morning, $5. Wow, that's some pain. Wow. Okay, what do we do with this? It's a big bearish gap, but how do we trade it? I have to come all the way here to my weekly, 37.60. There's really no reference point yet. So I have no idea what to do with that. I'll just leave it for now. CMI, ugly mess yesterday. I can't tell what it's doing. BSX, I can't tell what it's doing. CMCSA had a bearish gap. All right, it was at 32.50, but now it's 32.90. But look, it's still under, well, it's at the low end of this base. So that still looks lower. Bearish weekly, monthly, it's still going down. I don't know where it's going to stop. But look at this, was an attempt at a big W bottom, and now we're gapping right under it. This is a beautiful bearish gap. We will watch a 10, 15 minute low. So I'm going to put that in a thumbnail. DPS. This stock trade's weird. This almost looked like a buyout or something. And then look how tight this is. That trade's weird. Maybe it's tight. I don't know. I don't know what to say about this. But it looks like it's gapping down to 118. This would be a bear call credit spread candidate if we can get some juice. ETR. This could be a bull put spread candidate, but I can't tell where it's gapping, but definitely worth watching. GD, another military, gapping down to 216, which is, just eyeball it here. So it's a bearish gap, but I don't like the way this trades. I mean, look at the range of these bars. I don't know. I don't have any interest in that. GT, it gapped up and then sold off pre-market 26.50. It's on this prior low on the monthly, on the weekly here, but 30-minute low candidate. It's gapping under these recent lows, but it's not gapping under these lows. But if it cannot bounce after earnings based on this ugly gap and crap pre-market, this is a short watch for me. So I'm going to watch that too. And that concludes the pre-market, earnings and some gaps. Do you have any questions on any other plays that you're watching and or opens or questions about anything? All right, perfect timing again, 9:16. Greg should be coming on any second. Okay.
Good morning. One sec, guys. All right. Yes. Can you guys hear me? I'm trying to do this from a other computer now.
Yes.
Morning, Pat. Am I coming through okay? Yes? All right, cool. I'm trying to get things situated so that I don't have to switch back and forth, close platforms, open platforms, and I can just work from the one. I like going back and forth, but anyway, this pre-market thing, doing that, having to switch over, it's a little bit of a hassle. Anyway, let's see what's going on here. And, all right. So yesterday, market got a little bit of a shellacking. And now, let's see where we're at here. So you can see the chart in the lower left, the 24-hour pre-market chart. So this stabilization here, relative to what happened yesterday, means about zero. Just chopping there. There was a little sell-off and then the sideways. And so now it's just holding its own here. And just make sure this is right. Okay, it's right. We're right above the 200, which is obviously a strong reference point. And there is this support here. So what's the likelihood of this thing turning around? Clearly, there's news coming out that's going to affect lots of earnings, Facebook, so on and so forth. So I guess Google took it down here. And then the assumption was that, others are not going to blow the earnings away beyond anyone's expectations. So take them all down. We'll see. There's yesterday, and then there's today, and then there's the overall big picture trend, which in essence says it's just a consolidation within a major uptrend. And it's just wild and whippy. And, that's the way it is until things tighten up day to day. We deal with it until things get to a point where the volatility contracts and there's certainty and things trend and so on. So down near some support, it's holding on here. Probably everything else looks similar, right? So there's the Qs. You see the overall same pattern that's going on here into support further away from the 200. Why? Because the Qs were showing relative strength to the Dow and the S&Ps before. So they're just further away from a moving average. And it's one of the ways that we use them to determine relative strength and weakness. Intraday, just chopping around, hasn't been able to get above any resistance. So it's not doing anything to get excited about, thinking long or short. It's got a little range here, which I guess that's a plus in of itself, just to see which way it might break since it's defined that range. However, knowing these instruments as I do, they are notorious for false moves, and then it'll retrace, and then that's when you'll get the real move out of it. So, just keep that in mind, and we'll see what happens. Days like yesterday, that sentiment typically does not dissipate right at the open unless there would have been a significant gap to the downside. That's not happening. And, when I mentioned that in the room yesterday, I said, while that would be terrific, if we got a big gap down, it wasn't likely to play out that way because it just usually doesn't. It's like a gift, and we don't usually get those gifts. When they do, great, but it's not something that typically happens. The Dow, same story there. Maybe a titch stronger, but really nothing to go on here. Relatively neutral. Bonds still moving down, which means interest rates are moving up. And I wrote about this in the letter extensively on Monday. I did a YouTube video yesterday. If you didn't see it, you could review that. This is not a concern. This is what's supposed to happen, but the market just gets jittered, and it's jittered because it moved too far and it's still consolidating. And so if this was happening in the middle of 2017, nobody would care because it had just started coming out of its correction and the uncertainty of the presidential election was over. So environments change. Oil, which has been doing very well, correcting a bit here. It was a down day yesterday, pulled in with the markets, just chopping here. And maybe some of these oil-related stocks will provide us some intraday shorting opportunities in these companies that are a bit overextended. I started watching them last week. This is about the strongest one, and it's really hanging up there today. So, I mean, they don't look terrible, but thinking that they got a little ahead of themselves, it would look to them if they continued with some weakness for some intraday shorts. So we'll see if that actually plays out. Gold, which was up on the day as far as when I sorted the list of percentage change on the day, and gold, GLD was up at the top there. It was like what was performing yesterday was just junk that's been pushed down that had a kind of relief moves. That wasn't where the selling was going. So even something like Bed Bath & Beyond was actually up on the day because it's just been getting crushed, and the sellers just took the day off from to sell other things that were more important. So Bed Bath & Beyond was actually up on the day. But no big deal. Of course, it really wasn't much of a big deal other than what got clobbered, like Caterpillar. That was kind of a big deal. It just opened up and then just cratered from there. So as it hit some support, they just went down and continued to go down. So let's just look at some of the ETFs here. Big red day, no real damage done since it's still within a trading range. Russell, really no big deal. Just continued slop and chop. Mr. Schizophrenia still here in full force. We'll see if this flows through. Q's took it on the chin. It's the worst because of the FANG stocks getting smashed. And so we'll see what Amazon and Facebook have to bring to the table and where that goes. And spiders, down, same as, we're looking at the futures there and back down, but, pre-market here, not doing anything. Twitter's up at the active list here, pre-market that reported. They pushed up near $35. That's pretty good. All the way back down, no real confidence there to hold on to it. So maybe something there to do. Boeing really has to get above the high of that red bar to get interesting. So just trading with inside the range, not a big deal. And TER, bit of a smash on that one. I'm a little off here on what I'm looking at. I just set this up so I didn't have to switch computers. Just looking at what else is down here or up. A CHKP 94. Okay, that's a possibility for a gap trade. See if there's any support here. 94-ish. Okay. This one has possibilities. Well, what we're looking at with these gap type of situations, what time is it? 3 minutes left. So I can do a little commentary on gaps here. What we're looking for, a few things. So I went to the weekly chart to see if there's any support, and there's no support here. Assuming it closes here, you can see it's at 94.99. So it's breaking down below all of the support, and it's got a void below. Terrific. And then on the daily time frame, we look for, is there shock to it? So it's a sizable gap. So we got to be a little careful with this because of the size of the gap as to whether it might be able to retrace or not. So I don't give this points for shock because yesterday was a topping tail day up at resistance, rather than if we were looking at this and it gapped down here, right, which would have been a much smaller gap and gapping under a wide range green bar, that would have shock to it. This is the essence and a whole lot more that's in the Advanced Gap Strategies course as to what we look for in gapping stocks to play. So, as we go through this one, we say, well, there's no real shock there. The markets aren't really doing anything of any real significance here. So is it showing any relative strength or relative weakness? Well, weakness, but markets are down anyway. So it's not like the markets are gapping up and this is gapping down. And so those are the things that we would go through and a few others to determine the probability of, a gap being, a high scoring type of a gap. But anyway, this is gapping under support and it's got a void below. So we have to keep an eye on this to see how it shapes up. And since the markets are opening lower and they're not really doing anything of any significance either, I kind of see the open as being a bit neutral. So we're probably going to give it 5, 10, 15, 20 minutes, whatever it takes to determine that there's some real direction here, one way or the other. And let me turn this off and get resituated here with my platform because the market's going to open in less than a minute, guys. Give me a few minutes. All right, guys, getting switched around here. Frenchie on YouTube there. S&P 600 is small caps. It's like the Russell 2000. So completely different market indice, different number of stocks.
This Golf
Not
Tango
only number, whole different type of stocks that are trading there.
As an earnings gap play, we looked at Golf Tango, maybe a 10-minute low.
Guys, let's get going here. All right, so let me go back here. So market-wise, Spider's opening up right where they closed yesterday. Q's opened up just above the range, but coming right back in here. So dead neutral type of open here. FedEx a little weak.
Yeah, I wish we got that 15-point gap down, because then over a 15, 30-minute high.
I have these thumbnail intraday charts, and when you look at an intraday chart and it looks like something of interest, you always have to go out to the higher time frame to check that. Twitter coming in pretty hard. Let's give it a few minutes. Let me go through some of these gappers. Big gap up. Sandler. So that would not be of interest. Gap right up toward resistance. Six Flags. Okay. That one could have been considered. Too slow on that. Maybe. Interesting, then ticks are just hanging down there. Like 5-6 minutes already, and they're just hanging there. They're starting to inch up now.
And the Q's stronger, like we said, pre-market. Yeah, I wish the Qs had the multiple expirations like the spiders. They're losing business. I wish the pain would just come and sell off, so then we could jump on the long side. Nice.
Market looks like it's getting a little weaker.
Look at that LOW. That, remember, we had a group discussion about whether to leave the alert.
CHKP is trying to inch higher. So it's fighting the market here. Twitter coming into its gap fill. I'm watching this Oxy Petroleum and Marathon Oil, possible intraday shorts. They're just hanging up here right now. Started to move down and bouncing back up.
That Cree I was watching as a bullish gap totally gave it up again.
The CHKP, maybe it gets up to 97.40-ish, maybe a little bit more. That's where it broke down from. So the bottom of the area right there, maybe 80s, anywhere in here. If it inches up into that area near resistance. That's not a good gap and snap, Andre. Gapped under the base, and now you've got all that resistance to the left right there. Which, theoretically suggests it's not going to get very far. Market weak, but still within a range.
Volatility ripping up to the prior high would be perfect alignment with another spider sell-off. Wow, what an ugly reversal in Twitter, as you said, Greg. And
The spiders at the bottom of the range. Let's see if there's any buyers there.
Gulf Delta, another military stock. It's ugly. Boeing giving it up. I mean, I wonder if these military stocks, I mean, they've been advancing since the president-elect election because of all the money being plowed into rebuilding the military, but they're sure acting like they're toppy now. Wow, Greg, a relative strength. Look at NSC. That's a pro gap over a big ugly red bar. It's a deep retracement on the intraday, so nothing to do right now, but nice bullish gap.
I shorted MRO here. It's holding. Looking for it to continue to trend lower. Daily red yesterday, and I see Oxy, which is stronger, is starting to drop here. So looking for MRO to follow suit. It's got a little bit of support down below there.
Wow, that Lulu continues its relative strength also. Wow. Greg, you don't hear me talking?
I do now, Dan. I had this computer muted because I was talking from the other one.
Yeah. Okay, you have it because I was testing because I was saying things to you throughout the morning and you didn't respond, and I was checking my mute button 3 times. I'm like, what's going on? Yeah, I was just saying Lulu, incredible strength. Now I'm going to put that. I'm working on that new seminar, as you know. I'm going to put this one in the climactics examples. I'm going to grab a bunch of charts and I'm going to say, let's talk about the quality of them. And Lulu is not a quality. It's not. It's, you know, it's not the fluid extension move far from the 20. That's just strength right there. Every red bar ignored. So I'm going to grab that chart right now. This Golf Tango that I mentioned as a nice weak stock. That 5-minute low worked very well.
Andre in the YouTube's asking about a 97.5, 93 out of the money bull put spread with an IVR of 98 with DTE
On
3 days.
On what?
Post
Stock?
earnings, Texas Instruments.
Okay, I'm grabbing Lulu here. And then let's look. Texan. Yeah, it's a bullish gap up, but it has a big topping tail. It's sloppy intraday, but selling a put spread, you're just calling a bottom. I would want to wait a little longer. I do like the fact that the market's made new lows here and they're getting a bottoming tail. Again, with the horses, I wish it would sell off more, but we're just got to trade what we see. Let me look at those spreads. They're very spready. I forget what strike you said. Was it the 97 or 98?
But I said 97.5.
Yeah,
the other was 93.
Yeah, the problem is that 97.5 is 29 cents by 61. That is massive spread. So, again, homie, don't play that. Oh, I remembered where that came from. Let me show you all where it came from.
Was that homie?
Yeah, I mentioned it this morning when I was doing my thing of gaps and earnings. I was talking about Boeing, and I'm like, what show was that in? But I finally remembered it, and I found this link. It was Saturday Night Live. Here, this was Homie the Clown. He would always say, "Homie, don't play that," and he would hit the kids with something. That was old Saturday Night Live. Homie D. His middle name was D. Period. Homie D Clown. So yeah, Texan. Yeah, I wouldn't do it just because of the spread, and I'm sidelines here again until I get more confidence that we have a short-term bottom. Let me check the spider puts for today, just so if we get ready. All right, we took out the prior low. So now we would do the 261s, our today's low. Wow, incredibly juicy. We could do the 260s, Greg, that expired today for 55 cents. Wow. The 259.5 is 41 cents. On this next 5-minute retest, I'm going to stalk this. The hourly still in a downtrend, but I like the new low bottoming tail. We're getting a deep retracement on the 5-minute now. So the next higher low, I'm stalking these 260 or 259.5 puts. Spiders expired today.
I'm still watching the CHKP to see if it'll, it's getting up to that area to see if it rolls at that time. Oh, we're starting to get a little bit of a increase in put buying finally. See up here. That doesn't mean the market can't go lower, but it's what we want to see as far as the potential for a turnaround.
Yeah, get that up to 150.
And that doesn't happen too often. The market would get ugly to get that.
I like ugly, because ugly is real. Ugly is pretty.
Facebook's going down. FANG stock's still in trouble.
Yep, Q's. Yep, Fang's dragging down Q's right now. Yeah, I don't think the spiders are going to hold if the cues keep dragging us down.
I mean, a little bit aggressive. We could short these spiders right here. Would stop above 2 minute um, reversal here. 200s there. CHKP went right up to that area there. I didn't get it. Maybe it'll pop back up again, but who knows? Watching too much now. It's oil stocks. They still holding. My God. Ticks are saying under zero. Oh.
Oh, wow. You aren't kidding on Snap. Wow. I have no idea what happened, but that surely looks like news. I mean, look at that fall on the hourly. I have no idea what is going on there.
What are you talking about, Dan? Snap.
Look at that fall on the hourly. That's ugly fall. I don't know if it's, Twitter related.
Probably. Just based on the hourly chart of the Qs and spiders, I don't see reason for them to turn around here. I closed my MRO about break even. They just don't want to go down, so I don't want to spend time looking at it. These stocks just don't want to drop, even though they are extended. No, I just leave them alone.
Oh, Pat, that's crazy. Yeah, I mean that it totally looks like news. Just compare that. Look at the hourly chart. That bar just engulfed how many hours in 30 minutes, 35 minutes, hour bar. That's why we use stop losses. You know, when the pattern's not working, we hit the sidelines. Actually, the transports on the hourly are taking out their pivot from yesterday. So some transports holding strong. Look at the NSC that we talked about, a bullish gap. That's back to the highs, but it's at resistance, but it's a very bullish gap. NSC. Well, Spiders actually held that prior low, and now it's double bottom on the 5-minute.
Seems to me like they're struggling pretty hard for.
But confidence-wise, 0 to 100, how confident are you that this is a day's low? I mean, the hourly's still ugly, but we have a double bottom on the 5-minute. Now we negated that ugly 5-minute bar, red bar.
I'm not confident the day's low at all.
Absolutely. That's exactly, that's my point. Exactly.
I'm thinking of shorting it, that it's going to go lower. I think the only thing that's holding it here is the 200 MA on the daily.
Yeah.
I mean, there is, although in the Qs here and the spiders, there's a little swing over there from April 4th that it's sitting on. But the ticks have grinding higher, and spiders are just going sideways. What time is it? I'm going to short these spiders here. I'm going to give it at least $1 stop. And they just seem to be struggling too much. See 2 minute here, and I got my stop up above this area, but it's just grinding here long enough that it's trying and it isn't going up. So Federal Express showing a little relative strength. Now, at this point, to turn this day around, you know, the spiders they have to get back up above this double top here. And the longer they stay down here in the bottom of this range, the more bearish it is. But
I'm just looking at some of these Dow stocks. We got Walmart up almost $1, still in that sideways range. I would love to get a breakdown failure. Disney up $1, but no pattern. Apple looks like the best FANG stock today. And then Boeing up over 3, but no pattern. Well, Dan, the reverse one that we trade is a TBT. And, it's up 1, 2, 3, 4, 5, 6 bars at the prior high. So there's nothing to do with the yields or bonds right now.
going like 45 minutes and the market hasn't moved. There's no confidence one way or the other here. It's just not yet. Just building up this area right here on the 2 5 minute whatever. Well, probably I would, Patrick. I don't think we could look at the options table, but from where this is moved, you'd have to at least be down here, and it's up at resistance. So not ideal that it's at resistance, and then of course it always comes down to how far out.
Exactly. Time and strike. The 140 for Friday, if you were just betting on today's bullish bar, holding for 3 days, is only 35 cents. So that, the 134, if you went all the way down there for next week, is only 35 cents. If you went out to May, well, this one's not so bad. You could do May. I mean, it's wide, a 133, 120 for 70 cents. So that's I couldn't fault you for that.
261.73, Pat. What was it? 261.47. I was looking at the last 261.47.
No, Pat, yeah, when just so you know, if I just say a month, April, May, June, July, I'm always talking about the monthly expiration, which is the third Friday of the month. Or I'll say the weekly and give the days to expiration. So the May expiration is May 18 right now, 23 days to expiration. Yeah, that is a wide strike of $12 a share on that NSC. So yeah, that is a little more intensive. But just so you know, one contract, $12 wide, would be $1,200. You take in $70 on a one lot, and buying power 1,200. So yeah, it's not ideal return of capital.
Airlines getting some buying today, even though oil is staying up. But American Airlines just coming into what would be a sell zone, possibly if it turns. But they're bottoming tails, but too early in the day to think of them as possibly staying that way. Delta's been the best of the bunch.
I'm just staring at this 5-minute spiders, and it's been quite a battle here, but bulls are winning right now. Those 259.5 puts that were 41 cents earlier are now only 19 cents. I got cut in half.
Everything I see that has popped up a bit. And semiconductors, some of them have done decently, but they're in downtrends. Almost everything like this, which I don't play these, something like this. Tesla, nice little bounce, but just coming right up into where sellers should be. MGM.
Yeah, Netflix looks like an ugly double top on the weekly now. And the people who bought the earnings gap up, that was pretty much the high so far.
As far as Home Depot's holding, it's the bottom that continues to shape up. A lot of times it just takes a long time of stalking something.
Dan, is this your first extended chat room? Or is it ongoing? Not quite sure what that means. Greg and I have, Greg's been in the education business for 25 years, and I ran chat rooms for him over the years, but we just started this one 2 weeks ago. First time together? No, not at all. Yeah, I worked for Greg at Pristine and ran the advanced trading room, the advanced stocks and derivatives trading room. And, Greg was running the company, of course, but he would come in there all the time.
Oil just took 5 minutes ago. Nice little drop to the downside relative to a 5-minute chart, that is.
Yeah, I wonder if there was any number to, oil numbers always come out at 10:30, but I don't know if one was today. Yeah, V-cell. That's a bullish reverse head and shoulders on the daily. Although you had a few false breakouts, that left tails, but relative strength for sure. So I'll throw that into my watch also. And I would love to sell a $10 put on that, but the problem is it's too darn spready. The $10 puts for May are 10 cents by 60. But that's an example of one though, where you can try to play market maker and see if you get lucky and offer out at 55. And I'm going to do that provided there's no earnings. Yep, no earnings. They were in March 5. So yeah, I'm going to offer out a 10 lot at 55 cents and be low offer. Because I'm just looking at the pattern, you know, $10 is way the heck down there. Or I could do, and say this is crazy where, you know, if you get filled, it's an absolute error. If you look at the $5 puts and $2.50 puts, there's 0 by 45 on VSell. So if anybody were to buy those strikes, they're guaranteed a screw job. Because, I mean, and there's so many examples of this. So I just hate illiquid options. So the $7.50 puts are 0 by 35, but that's a closer strike price and it's cheaper than the 5 and the 2.5s. So I think it is 100% criminal that they would allow a fill for those out of the money ones. And I think it could be attacked in two ways. One is, you know, the SEC requiring market makers, you know, not to have these ridiculous spreads or don't even post them. Or number two, and I did email Thinkers TD Ameritrade on this, believe it or not. I said you should have an alert button that says, "Are you sure you want? Are you sure you want this? That you're buying it out of the money for more than a higher strike price? That makes no mathematical sense whatsoever." And they said they agreed they would look into it, but they, you know, they candidly just said, you know, we'll put it in the queue, you know, for the developers to, you know, rank them. But they said it's a priority, you know, everything they do, like with any other company, is they got to prioritize things. And then it's their company, so they have to make the decision of where it ranks in priority and if it's worth their development time to put in that recommendation. But I was the unfortunate recipient of one of these one time because I was trying to sell, just like I am saying here, trying to sell something as low offer. And I was rushing or whatever, and I actually bought it instead. So this story that I'm telling you about, a guaranteed screw job if you get filled, happened to me. But it was a total error. It was a human error. And I called to ask them to bust it, and they said nope. It was Citadel was the market maker. And they said, nope. Why? You just gave me a gift. Why would I give you the gift back? Yeah, yeah, they rank them. Yep. Yep. But we do the same. You know, we have a list of liquid stocks that we have in the members area, and it's roughly 130 of stocks and ETFs. But I'm talking about a human error here, and you know, we're pattern traders. They're not, and that's why yes, we have our liquid go-to list that we use. But as Greg's the master scanner here, we're coming up, and you found VSell, right? You did. We find great patterns, and then we have to decide: do I want to trade the stock? Do I want to trade the option? Is it a day trade, swing trade, core trade? And is it a directional or income trade? Banks are still green, up 1, 2, 3. As of now, banks are 5 green days in a row. Bitcoin had a bearish gap down and ugly day on the hourly.
Which banks, Dan? I don't see any banks up 6 days in a row.
KRE.
Regional banks.
Yeah.
Are those real banks?
They better be, because we're short puts in them. Oh, Greg, I don't know if you saw the comment I posted yesterday about the Russell 2000, or maybe it's 2 days ago. It doesn't matter. But it's also from that Sovereign Man newsletter that I quoted, the the frivolous Budweiser lawsuit. And he said that, and I'm going off memory, it was something like 25% or 30% of the companies in the Russell 2000, so the IWM, didn't make enough money to pay their debt service.
So why are they still listed?
That's a good question. Yeah, spiders, we now, deep retracement, bottoming tail. So on a pullback now, provided, just look at the retracement rules we always teach. So 5-minute chart is 100% retracement back to the, open, the crash right after the open. So if we hold 50% pullback and it's approaching 11 o'clock, so I'm not interested in doing it now myself, but ideally over lunch and then after 2 p.m., we get our intraday bullish setup, and we'll start, we could sell some puts that expire today, although, 2 hours to go, we aren't going to get too much. And then we can consider nibbling for a Friday expiration.
Oil came all the way right back. There must have been some news there. Well, I added to that short and I'll stop the whole thing out. I mean, the stop on the what I added to is right above the highs. So this hit yesterday's, today's open and yesterday's close and the prior high there. I add, and if it gets above here, I'll be out. I'm not out. I added to it. And in reality, you know what? If it retraces 50%, I might only make a little bit on it. And I mean, I gave it that kind of room. I knew what the possibility was. Obviously, I didn't think it would do it. I was wrong. However, I wasn't going to cover it exactly where, if I was out, I would have put the position on for a scalp. So and it would be nice if it just tanked here for me, but I know that is not within the realm of what true probabilities are because of the depth of retracement. Would Zuckerberg be considered a millennium, Dan?
Zuckerberg?
Yeah.
Yeah, I think so.
What makes someone a millennium?
Just their age is pretty much it, even though Saturday Night Live also has a nice skit about, their behaviors.
Yeah. I'm aware of their behaviors.
Right.
But what age group is that?
Let me Google it. I don't know.
A baby born in the year 2000. A man's a millennium baby because she was born in 2000.
Yeah. Okay. So here's the range. It says, 82, to 2000, somewhere around there.
1982. All right.
Do you remember in the old days, Greg, like when you and I were growing up, when we wanted something answered, we had to go to the Encyclopedia Britannica. That was my go-to. And now, just Google it.
Yeah.
Google is phenomenal service, even though
It's most of you, I don't know, I assume, know me. I don't, of course, you don't know maybe how old I am, but yesterday was my Middle child's birthday. She was 32 years old.
Well, so he just made it.
She.
She 18 plus 18. Yeah.
Yes.
18 plus 18 is upper is 36. So it's 16 to 36.
That's exactly right, Dan. That makes me 62. Andre on YouTube says he still has his Encyclopedia Britannica. IBM was a late start to the sell-off, but now it's pretty bad. Snap did not bounce. I covered some of my spies here. Door to door Britannica. And I never had anyone come to the house, but I saw the old movies. Guys used to walk around selling vacuum cleaners. Amazing. Yeah. I remember as a kid doing door to door like that, selling newspaper subscriptions. Yeah. Wow. Guys, write this one down. Maybe, I don't know. I have to see when it's reporting earnings, but this came back strong and the daily looks good. It's just consolidating after that gap up. It's going to report May 8th. Yeah. It's a nice pattern. We'll see if it holds on to it by then. Amazon, all the way back, bottoming tail.
Well, it's a very nice pop here. I'm checking out the cues here for Friday. We could do the 156, 151 for the cues is 52 cents. If it were after 2, I would do it in a second. It's just we got the lunchtime risk is all.
At this point, you know, to be bullish for a few days, we need to see the patterns right now that have developed stay this way into the close. So, you know, even stocks like Netflix that have rallied all the way back, and Apple, and you know, as we get, you know, through lunch and to the end of the day, do they still look like that? So anytime you look at a bottoming tail bar, you look inside of it and you know, did the rally happen at the end of the day or did it happen in the morning? So here, you know, after things dipped down, they rallied up. So if they can consolidate, which means buyers continue to come, and that would be bullish. And now the way this came down yesterday, you know, just historically, when something drops at that angle, as this did, they typically don't go back up to the high. Meaning not in the short term. They typically pop up, and you can see the way this hourly chart looks. It pops up and then it comes down and it retests or it goes sideways. So I'm not saying we couldn't hold it for a couple of days as a trade. What I'm saying is have your expectations in alignment with how it came down. One of the things I mentioned yesterday was that reversals that have 2 and 3 bars in the area of the start of the reversal have higher probabilities of moving, you know, in a momentum style versus a choppy style. So here we've got the hourly still in a downtrend, but we've got a reversal, and it's still early in the day, so we don't even know that it'll stay this way into the close. But obviously we're going to see. what Dan wrote there, Dan, was, assuming a certain number of contracts, you would close half of them. Buyers keep coming here. Anyway, so my SPY trade went out about at a break even. But I'll tell you, if I had managed this just on this pattern here, obviously it would have been a loser, but I would have been a full loss versus what turned out to be about a break even. By giving it that extra room and share sizing it up here, I sat through that, wasn't pleasant, and then added to it and rolled down and covered most of it. And then the rest, as it showed a little bit of strength. But using tight stops, and it would have been foolish to use a tight stop in a situation where the hourly was a bit extended, and I did know the 200 was sitting there. However, other than this one bar that was sitting right there, I was looking at this, and when it couldn't rally, I thought it would be able to drop down into this area. So it didn't happen, but the management of it, I wasn't going to go long based on this chop here. This looked to me like it wouldn't go down. So buyers came in, so it isn't a buy setup for me. So then it, ground its way back up there. And, so I was able to just manage out of it without any harm being done. But these, tight stops like this, they kill you. There are times for them, but this wasn't one of those situations. Just a little breakout failure there on the 2-minute. So probably we're now officially into the doldrums, and we'll see how far this pulls in or chops around. Yeah, I know that's, why everyone is here is, of course, to make money. But sharing, what I did here, even though it didn't turn into be a winning trade, can help you, avoid losses or manage things better in the future. But once it reached this point here, and it didn't drop that much, but in reality, what I did was I tripled the size here. And that's how I was able to, it came down here. And, was able to get it out pretty much at a break even. I just knew it was a super high odds scenario where it was going to pull back at least a certain amount. And if it really picked up steam, it would have pushed down through here. So I covered initially here. And then when it started to flip back up again, I was like, nah, it just doesn't look like it wants to drop. And so just stepped aside. I saw this one setting up. I didn't do it. Actually, it was right around here. It didn't rally that much. It double topped. We'll see how far these things go. Financials are still weak. However, oils are still holding up amazingly. See ya, Andre. Even this definitely looks like it should come down for a couple of days, but it's extended. We'll see how that sets up. All right, guys, let's take a little break and let's see what the afternoon will bring us. We'll see how far this thing pulls back, if how much it's going to do it, or if at all. And we'll have an assessment as to what the afternoon may provide. All right. Okay, I was talking a little bit